Good morning, everyone. We'll go ahead and get started. Welcome to the Rocky Mountain NetSuite user group. I am Corey Anderson, the president of the group, and I'll be your host for today's meeting. So this is our agenda for the morning. We have our welcome and general business, and then our member announcements from 8:30 to 8:45. Then we'll hear from our meeting sponsor, AvidXchange, today. Then our main presentation is a topic of advanced revenue management, and that'll be presented by Mike Kachline of Vertafore. If you are here for CPE credits, the CPE credit time window is from 9 to 11, so we'll have the credits going throughout the meeting during that time frame. After the main meeting, we're going to have our 2025.1 highlights, and that'll be for about 15 minutes or so. And then we'll have our open forum. During the open forum, it gives you an opportunity to ask any questions to the group that you may have, any challenges, anything that's coming up. During the member announcement section, if you have any job postings or looking for a job or anything like that, that's a time when you can unmute yourself and make an announcement. We also have a chat window where you can post those announcements in the chat window if you'd rather do it that way. Take a moment to talk about membership. So the membership to our user group is free. All you have to do is register at RMNSUG.org. Once you register, that ensures that you get notification of upcoming meetings and events. You also get our LinkedIn forum access, but that's actually changing now that I think about it. So I'll probably remove that. We'll talk about our LinkedIn forum changes here in a moment. So if you're not a member, please go ahead and sign up on our website. So where to find us? We do have a website. It is RMNSUG.org. That's Rocky Mountain NetSuite User Group.org. We do have a YouTube channel. We record all of our meetings and we post them to YouTube. So they're available on our YouTube channel, and then they're also available on our website. All of the meeting posts and recordings, the slides, and all of that, which I'll show you here in just a second, actually. We're also on LinkedIn, and we have our LinkedIn group here. So I'm going to just do a quick switch over to our website because we get this question a lot. Of do you record your meetings? Is it available afterwards? And so the answer is yes. So all you have to do is go to our website, rmnsug.org. If you want to see our past meetings, you click on posts, and you can do a search over here for the topic that you're interested in. If you're interested in it, we've probably done a meeting topic on it in the past. We've been doing this for, I think, 15 years now. We do have archives. You can go back and search that way or just use the search bar. And then we have today, this is our NetSuite Revenue and ARM meeting. And if you are interested in downloading the slides to follow along on your own screen, you can download the slides right here. This will be for today's meeting. So that's our website. And then we have our LinkedIn forum. So our LinkedIn forum, we just recently made it a public group. It used to be a private closed group, so it wasn't available to be searched for throughout LinkedIn. But we just recently made it public, and we're excited about this. We hope that it's going to generate more activity. It's going to generate more engagement with the users. We've been very careful about the rules that we put in place on the LinkedIn group. We don't want it to become spammy. There are very specific rules about who can post and what can be posted. If you're a general end user and you have a question and you want to get help from the group, those types of posts are really what we're here for. So if you haven't gone to our LinkedIn group, you can go check it out now. Just search for RMNSUG or Rocky Mountain NetSuite User Group on LinkedIn, and you can find our group. You can join the group and become active participating member. We will also post all of our events and notifications and things on our forum here. All right, I'll switch back. All right, moving on. So that's where to find us. That's our website, and our LinkedIn forum, as I mentioned, is now public. Just a quick moment to introduce our board of directors. So that's me in the upper left-hand corner, Corey Anderson. I'm the founder of Stratos ERP Partners. Then we have our sponsorship and member chair, Margie Cominos of the Plant Scan Corporation. She is one of the original founding members of the user group and has been on the board since the inception of the user group. Then we have Mike Kachline of Vertafore. He is doing our main presentation today. We have Peggy Evlith, our speaker chair from RSM US. And then I forgot to mention Mike is our communications chair. And then our treasurer, Dana Larson of Dana Larson Consulting. And then our newest board member, our events chair, Ryan Longnecker of Collective Mind Technologies. So thank you to the board and everything that you do to help keep this user group running. So I'll take just a quick moment for any member announcements. You can post it in our meeting chat if you want, or you can unmute yourself. I'll pause for just a minute or so if anybody wants to make an announcement. Again, you can also put it in our LinkedIn group if you'd prefer as well. So any announcements? Okay, going once, going twice. I know it's early. Nobody wants to unmute themselves this early. I get it. All right. Well, if you think about it later, post it on our LinkedIn group. If you're looking for a job or have any job postings, that'll be the best place to do it. So evaluations, we do send out a survey at the end of the meeting today. Please take a few moments and let us know how we're doing. We read and act on the feedback from those evaluations. It's what we use to guide us to make our events better for everybody. And so please just take a few minutes and fill that out. Our meeting sponsorship, excuse me, membership to the user group is free, as I mentioned. The cost of our meetings is supported by 2 levels of sponsorship. We have Suite App and consulting sponsors. Suite App sponsors must be available through suiteapp.com, and consulting sponsors must offer NetSuite consulting services and have certified NetSuite consultants on staff. For the consulting sponsorship, we've made a little bit of a shift in our strategy there. If you are a NetSuite consulting firm or partner and you want to sponsor a user group meeting, you can sponsor by being a presenter at the meeting. And so when you sponsor a meeting as a consulting sponsor, you get to present, you get a slide about your company and the services that you offer. And then you also have the opportunity to have obviously your logo on your slides throughout the entire presentation. So it's a good opportunity for sponsorship. It's a win-win. It helps you get some exposure and it helps us get some fresh presenters and content for our meetings. So if you're interested, you can email info@rmnsug.org, or you can go to rmnsug.org/sponsorship. CPE credits, there will be polling questions throughout the meeting that you must answer to be eligible for the credits. You must also have registered for the Zoom meeting with your first name, last name, and email address. That's how the CPE folks validate who you are to be able to issue the CPE credits. You need to make sure that your Zoom app is up to date for the polling questions to pop up. We've had a little bit of a challenge with that in the past. So if I say, hey, the polling question is up and you're not seeing it, you might need to log off real quick, update your Zoom app, log back in, and then you'll do the polling questions. We do have a minimum number of polling questions you have to do throughout the meeting, but we do ask more questions than the minimum. So if you miss one or so, then you're going to be okay. The CPE credits, they take 4 to 6 weeks to issue. We are a volunteer organization. Peggy from RSM US, they sponsor the CPE credits, and so it takes some time for her to process those and for the folks at RSM to go through that process. And then Peggy just posted in the chat, the CPE certificates from the January meeting will go out this week. Their CPE approval process got backed up due to year end. So thank you, Peggy, for mentioning that. And thank you again for you and RSM sponsoring the CPE credits. It's a huge benefit to our group. So we have a brand new event type coming up thanks to our new board member, Ryan Longnecker. He is spearheading and organizing this new fun event. So we are going to have a happy hour NetSuite trivia night. The date is April 17th. So that will be a Thursday evening. It'll be from 5 to 8 p.m. And the location is it's like South Denver near I-25 in Arapahoe in the Tech Center area. We're going to have free food, free drinks, NetSuite trivia, and we will have prizes. So we will have the invites. The first invite has been sent out. And if you've ever been to like a Tuesday trivia night at a bar, they have different categories and different rounds of trivia. You know, some of them are music, some of them are history, that type of thing. We're going to follow a very similar format to that, but it is all NetSuite themed. So you can come and bring your NetSuite knowledge and meet some people and have a good time at our trivia night. So again, that's April 17th from 5 to 8, and you do need to RSVP so that we know how many folks to expect at that. Thanks, Ryan, for helping organize this. I think it's going to be a great time. Our upcoming meetings this year. So in May, we're going to do our advanced PDF templates meeting. In July will be our accounting spotlight. September, an inventory management meeting. And then in November, a meeting that we haven't done before. We're going to discuss native NetSuite budgeting versus NetSuite planning and budgeting. So there's a built-in budgeting functionality in NetSuite that comes with every account. And then we have the NetSuite planning and budgeting, which is their upgrade module that is a paid module. But it's a little bit of a mystery what the differences are between those. And so that's what we're going to uncover in our meeting in November. I'd like to take a minute to say thank you to our Suite App sponsor today, AvidXchange. And so at this point, I am going to turn it over to Keegan from AvidXchange to tell you about AvidXchange and what they do. And in the meantime, there is a raffle, and we'll post the raffle link in the meeting chat window, and then we'll post it again a couple times throughout the meeting this morning. And Tammy, to answer your question, there's 2 CPE credits for today's meeting. All right, I'll go ahead and stop sharing and turn it over to you, Keegan.
Thanks, Corey. Appreciate it. Good morning, everyone. Give me one moment as I share my screen here, and we will go ahead and get started. All right. Once again, good morning, everyone, and thank you to Corey and the entire Rocky Mountain NetSuite user group for having us. As Corey mentioned, we are doing a raffle today. You can scan the QR code that you see on your screen for a chance to win a $300 MasterCard gift card. There's a short survey in there, and as long as you fill out the survey, you'll be entered to win. Without further ado, I'll get started. And this QR code is actually on every one of my slides, so it'll be a little bit of Where's Waldo to try and find the QR code on each one of these slides. But if you missed the chance to scan it here, you'll get about 3 or 4 more chances. All right. So who is AvidXchange? And first of all, my name is Keegan Wilson. I'm an alliance manager here at AvidXchange and have been with the organization for about 3 years. I am primarily responsible for our NetSuite partnerships, and I'm sure I've met a few of you at the Rocky Mountain NetSuite user group in-person meetings, and looking forward to that event on April 17th as well. AvidXchange we are a leading B2B payment network in the middle market. So we actually automate the entire accounts payable process from invoice ingestion and capture, routing, approvals, custom workflows, all the way through payment automation. And I'll get into what our product offerings are in the next few slides here, but just some high-level background on who we are and where we got our start. We've pretty much been lock and step with NetSuite since our founding in 2000. NetSuite was founded in 1998, and we're actually the longest standing NetSuite AP automation partner in the space as well. We currently have over 8,000 customers and around 700 NetSuite users with employees scattered around the nation and at around 1,600 today. The last thing I'll call your attention to before we move on, and this will be important as we discuss what we do and how we work in the space. That 1.2 million suppliers enrolled in our AvidPay network we actually have an entire vendor portal to help our customers pay their vendors, whether that be the electric company or the lawn care service at your business. Um, all of those suppliers and that supplier network is growing on a daily basis, are actually enrolled, managed, and serviced via AvidXchange and 500 employees based out of our Charlotte headquarters. I'll explain more why that's important as we move through today's slides, but something to keep in the back of your mind as we move forward here. Give me one moment. All right. So if you think about the accounts payable process before an automation is put in place or any sort of software is put in place, and many of you may be experiencing this today, um, oftentimes it's slow, it's manual, as far as ingesting and capturing invoices. Most of the customers that we work with are doing some sort of manual effort to actually code, scan, and collect the data and information from the header details all the way down to the line item details off of the invoices from their vendors. Sometimes they're receiving that via email. We have customers that are receiving that still in paper form via either a PO box or to their um, company's address. And it's incumbent upon the AP team to scan, code, and collect that information off of each invoice. We've worked with many customers that are simply passing around a manila envelope around their office for approval. And you can imagine if an AP personnel is out for a week or goes out sick or on vacation, that can delay the process for as long as that person is out. Not only delaying when an invoice is scanned and captured, but also delaying the payment process to that vendor, and oftentimes making a late payment to that vendor. So you can see kind of the screenshot on the left here before automation and the 12-step process that most businesses are going through if they don't have a form of automation in place. And not only is that an extremely manual process, but it's also a costly process. Um, the estimated cost and the research that we've collected to process a paper invoice is around $16. And we do have a fair amount of customers still cutting and mailing checks today, paper checks to their vendors. And I've seen that cost as well as high as almost $4 to $7 as well. So if you think about the total cost of the AP process for one single invoice and one single payment to a vendor, that can be upwards of almost $19 or $20. When you put an automation piece in place, especially something like AvidXchange, that cost can be significantly reduced, and we'll get into why that's the case. But also the process and the manual effort that is being put into place can also be greatly reduced as well. So we estimate around a savings per transaction or per payment of around $12 when you're using AvidXchange as well. Feel free to throw any questions in the chat. I'll be happy to answer those once we're finished with the presentation. So as far as our solution, we automate the entire AP payment workflow, not only for DSOs, but also for other businesses as well. So if you think about the process of processing an invoice, that supplier will send an invoice to that customer, and we can collect and ingest those invoices in 3 different forms. We can set up a PO box for you. We can set up an email address and collect those invoices digitally, and actually scan, code, and manage those invoices for you as well. As far as our scanning technology and the technology that we have in place, I will actually move on to the next slide because it gives a little bit better representation of actually how we collect those invoices, especially in relation to NetSuite and your accounting system. We actually put a 2-pronged approach in place in the sense of having technology plus a human element, or automation plus people, as we call it. Those invoices are ingested, captured, and verified. As I said, we can set up that PO box or an email inbox as well, and collect and scan that invoice for you. We do have our own document capture service, very similar to an OCR technology, But we actually couple that with AI, and AI coding technology and machine learning to learn the invoices that are coming from each one of your vendors, so that accuracy rate continues to grow and continues to be more accurate as you're collecting more invoices via AvidXchange. We then also take that people element and have a team of human indexers that are based out of our Charlotte headquarters that are verifying any flags or exceptions that are coming through the system as well. So last year we actually had an accuracy rate of about 99.8%, which is extremely important when you're actually collecting and scanning and coding invoices and collecting that data. Why that accuracy rate is important is we typically work with customers that are processing hundreds, if not thousands, of invoices. So if you think of traditional OCR technology, that's about 70 to 80% accurate on average, which is great if you're only processing 50 to 100 invoices every month. However, as you get higher volumes of those invoices, it's important to have higher accuracy. That way, you're not having to go back. Your AP team isn't having to go back and correct a couple hundred of those invoices every month, despite having that OCR technology in place. So that automation plus people is really taking away the manual effort, but also increasing the accuracy of the data that you're receiving from invoices from vendors. We also have 2- and 3-way matching, PO matching technology to execute a 2- and 3-way match if you're processing purchase orders today, to match that to the receipt of goods and the invoice. And that auto coding technology is actually scanning the data that's coming off the invoice and doing that 2- and 3-way match as well. And then on the payment side, we automate the entire payment process. And all of this is connected to NetSuite via bidirectional API. And actually, our payment solution is a fully embedded suite app that is embedded into your Oracle NetSuite instance. So you do not have to leave your NetSuite instance to actually make and satisfy payments to your vendors. It's as simple as a click of a button within your NetSuite instance, a drop-down menu, and you can click approve on those payments as well. As I mentioned, we have those 1.2 million suppliers that are managed by our supplier services team. So we have the automation in place that's connected to NetSuite, embedded within NetSuite. And then those 500 individuals are actually managing those vendors. So you'll find with other solutions in the space that it's incumbent upon your vendors or your suppliers to enroll themselves into that vendor network or vendor portal. We actually manage that entire vendor relationship for you. So we're enrolling vendors. When we're working with customers, we're running a vendor match to see if we're actually paying any of your vendors today. And oftentimes when we're working with customers, about 50% of their vendors or suppliers are already being paid by AvidXchange, like accepting payments from AvidXchange, and have worked with us in the past. You do have the option to exclude vendors from that enrollment process. Say if you're paying the same lawn care guy over and over again, you've handed him the same check every time he's done. You can certainly do that with certain vendors as well. But a nice add there, we're taking away the management of those vendors for you. So if you do send a check to that vendor via AvidXchange, we're actually following up with them on stop payment. Have they received the correct amount? Would they like to change the form and method that they'd like to be paid? We offer 3 forms of payment method currently today: our VCC, our virtual credit card program, our enhanced direct deposit, which is our enhanced ACH solution, and then we will cut mail and stamp paper checks to vendors as well, all at a flat rate cost. So it's important also to note that as far as we charge our customers, we only charge based on transaction. You can have as many users and approvers in the system as you'd like. We work with many customers that have multiple entities, multiple subsidiaries or clinics and practices that they're working with. And so if you're paying out of different bank accounts, we're completely bank agnostic, so you can maintain those accounts. And then when you are paying those vendors, we're actually working with them to understand how and when they'd like to be paid. So some of the key differentiators or things that we pride ourselves on, especially in the NetSuite space and for NetSuite users, is that embedded payment processing in NetSuite, our dedicated supplier support and invoice and indexing team, which is that human element of our technology and its solution, are bank agnostic, so you can pay via any bank. And then if you are paying vendors via virtual credit card payments, you can earn rebates back. So we actually offer guaranteed rebates back to our customers who are paying vendors via virtual credit card, and actually provide a guaranteed check at the end of each year in the form of rebates, which can also offset the cost of AvidXchange and also your NetSuite services. So I'll keep moving on. I know I have just about a minute left. This is just a visual representation of our AvidPay network between our 8,000 customers and our 1.2 million suppliers, which continues to grow each and every day. And that's a two-sided network. So we're managing that and enrolling those vendors into our supplier portal. And that is all I had today. Once again, if you do have questions, happy to answer those in the chat. And once again, thank you to Corey and the Rocky Mountain NetSuite user group team for having us today.
Thanks, Keegan. Really appreciate AvidXchange for sponsoring our group today. Appreciate you being here. There is a question in the chat. I'll let you go ahead and respond to that in the chat.
Absolutely.
Yep, thank you for your time. And we'll go ahead at this point and turn it over to Mike Kachline for our main presentation today on advanced revenue management.
All right. Thanks, Corey. Let me hit the screen share here. All right. Can everybody see full screen opening slide?
Yes, it looks good.
Perfect. All right. Let me see if I can get some of my Zoom things out of the way. Welcome, everybody. My name's Mike Kachline. I am with a company here in Denver called Vertafore. We are in the insurance space. We're a rather large NetSuite customer, so we're not like a NetSuite consultant or anything like that. We are a customer of NetSuite, and pretty much if it's available on NetSuite, we use it. So I manage the team of NetSuite staff here at Vertafore, and kind of wanted to share with y'all our experiences with NetSuite's advanced revenue management suite, as well as just kind of start out with revenue in general. Let me see. Okay, so for those of y'all that are attending for CPE credits, here's the slide that kind of covers what we're going to talk about from a CPE perspective. But basically, from the super high level, we're going to talk about what is revenue from a GL perspective. So if you're attending this call, I suspect some of you are, and you're wondering, should I pay for ARM? I'm not quite sure. I'd like to know more than just the NetSuite talk. This is a good talk for you. So what is revenue? How does it work from a super high level? What are some of the scenarios that you would see revenue recognition happening? How do you basically do revenue recognition without ARM in NetSuite? We're going to get into detail, the triggers and schedules. So what are those things and how does that work from a high level? And then we're going to zoom into ARM and how it actually works. So revenue arrangements, elements, plans, and journals. We're going to cover all of those, and it'll give you a good overview of like how that module works. And then the final bullet there is kind of a flow of records and events. All right, and this is kind of saying it's sort of the same thing. The talk will be in 2 or 3 kind of big stages. So we're going to start with core concepts, and then we're going to briefly go again into I'll talk through amort journals, but basically the theme there is how do you do RevRec without ARM, and then we will dive into ARM. Okay, core concepts. So before we start talking about how you recognize revenue, it's probably important to just cover again what is revenue. What does that mean? Because some of y'all are in different stages of your company. So some of you, this maybe doesn't matter. You're just curious. Some of you are living it every single day. And some of you maybe have grown to a point where now this is important and you kind of have to evolve. So, what is revenue from a super high level? It's the amount that the seller states on your income statement once you've delivered, and the buyer has provided a commitment to pay. So there's a lot that's kind of implicitly stated here. So you have not received cash. The buyer just says they'll pay you. And then you have to actually deliver something. So, this will be a theme that we talk through, and why ARM is really so valuable is it helps you differentiate those two. But revenue from a, accounting perspective, it's revenue, strictly revenue. It's on your income statement. It's not on your balance sheet technically. It's on your income statement. Um, Also, you will hear, the terminology revenue, you'll hear the terminology income, and sometimes you'll hear like, people say the P&L, the profit. They're all kind of in that same space, even though profit is technically going to be a little bit different. But that is what we're talking about when we talk about revenue here. It's so you've delivered value to your customer and they have committed to pay for it. So some high level examples of when you would do revenue. The most simple is cash and carry, right? So, or fulfill and bill. So this is where like, somebody comes in and they buy something, they hand you cash and they carry it off, right? So this is great. You can say on your income statement that you recognize that revenue and the customer clearly got their value from you because they walked away with your product or service. Fulfill and bill is really close to the same, but when you think about it with fulfilling, you are sending something out, FedEx or UPS or something like that. So they don't technically have it, but you've shipped it and they more or less have it. And you don't technically have the cash because you've sent them a bill, but you effectively have the bill, right? So that's kind of the second derivative there of a simple. A third that I think a lot of you are probably in is this monthly subscription billed monthly, right? So this is where, for instance, the most classic case would be you provide an electronic service, an e-service of some sort, and your customers, you bill them monthly for the month that they have consumed service, or maybe the month that they will be um, getting service from you. So it's just kind of a month-to-month tick-tick kind of a thing. And then another simple scenario is professional service time and material. So this is where, you're providing service to your customer and you bill them at the end of the month for some number of hours. That's pretty simple revenue scenarios there. In all these cases, your value delivery and your ability to recognize when you have revenue is pretty tightly coupled. It starts getting more complex though. So some complex scenarios, which is honestly what drives a lot of people, I think, to ARM is when you start getting in these complex cases is, what if you make a deal with your customer and they, they want to be billed quarterly, but you, for your shareholders, you want to be able to recognize revenue on a monthly basis or on a, or even as delivered basis. So you get this disconnect between when you're issuing bills and when you want to recognize revenue on your income statement. So that's where revenue recognition becomes a little more complex. Another one that's big at Vertafore we see a lot is the professional services percent complete. So this is where you have like what is typically known as like a milestone professional services. So you and your customer agree that they'll pay you some amount of money if once you meet a milestone or once you meet a milestone. So you really can't, your billing and your recognition cycle are very different then, right? You can't really recognize the revenue that you've delivered value to them. Say you've turned on a subscription. You can't do that until the very last day, until you've actually turned it on. But you might have billed them up front, right? So you can't recognize that billing up front because you haven't actually delivered value. So modules like ARM help you keep track of basically the billing and the revenue recognition, and we will go into a fairly decent amount of detail on how that works. Okay, so GL. So it's important, we are all in some realm of accounting in this group. So when we're talking about revenue recognition, I kind of want to set some fundamentals on what's going on the GL. This is actually really important. Um, and this is, again, for especially with ARM, it's important. So from a high level, your revenue, you're basically moving funds from the balance sheet to the income statement. So, you think about the very simple, like cash and carry, like you got, cash on the one end and you've got, revenue on the income statement. Um, so funds are moving from the balance sheet to the income statement. You think about the flow of funds, it's from balance sheet to income statement. That's going to be important, just to remember that concept. The other is that in NetSuite, at least, revenue recognition, we're talking line level, right? So you think about a credit memo, you think about a invoice, sales order, even the entities that are going through ARM and are being accounted for are going to be the line level, not header level. Header level is more like suggestions, but line level is where the real details at. We're excluding taxes. So when we talk about revenue recognition, taxes, there's no deferred. That's a whole different thing. Like if you're trying to defer taxes and all that. So ARM is not going to be looking at taxes. We're just looking at subtotals here. So that's important to know too. It also simplifies things when you're working with ARM. And then in the GL, you're working with three basic types of GL accounts. So you're going to work with the income accounts of type income. These accounts fall on your income statement. And that's like the destination, right? When you're done recognizing revenue, the revenue will show up in an account of type income. We also, though, have these accounts of type deferred revenue. These fall on your balance sheet. And remember, things flow from the balance sheet, the income statement. So deferred revenue, we're going to talk about it more, but it is a liability. So it falls on your balance sheet under liability section. And in NetSuite, again, NetSuite have GL account types. It is of type deferred revenue. So you got to make sure, and I'll cover a slide later on there, but just got to make sure deferred revenue is deferred revenue. It's not like, you know, other in or other liability or something like that. The type is actually deferred revenue. And then finally, there's a third type of account called unbilled receivables. So this is going to be on your balance sheet again, but these are assets, and we will cover these a little bit later as to why these exist. In my opinion, these are like part of the super magic of like why ARM is actually pretty awesome of how it manages your unbilled receivables. Um, so yeah, three basic GL account types we're dealing with. We've got income on your income statement, deferred revenue, which is on your balance sheet as a liability, and your unbilled receivables, which is on your balance sheet as an asset. And again, your funds are moving, they're flowing from the balance sheet to the income statement. Okay, so this slide, billing versus revenue recognition. So if you're new to ARM or you are going into ARM or you're a small company and you're, traditionally in the space, let's say of, providing month-to-month subscription services, you probably are living in a world where billing equals revenue. It just always does, right? Like that's kind of how you think because that's how the world works for you right now. And when you talk about ARM and revenue recognition and get into things like ASC 606, you realize that billing doesn't equal revenue recognition in that the only thing that's really equal is that at the end of the day, when everything's all said and done, everything has to add up. Like you can't recognize more than you ultimately build, but the path, the road that you travel to get billed, to get your customer billed, and the road that you travel to recognize the revenue that you ultimately will bill, those could be two very different roads, very different schedules, very different triggers, and we're going to go into that. So I just want to, again, for some of you, this might be a like, oh, really? Is that billing is not one-to-one with revenue recognition. If you bill, that doesn't mean you recognize. Now, for a lot of you, that is what that means, but it doesn't have to be that way, and that's where ARM really helps. Let's see. Yes, and then there's the triggers that we are going to talk about in this talk too. This is really core concept though, and for some of you, it'll just be like, mind twisting, but for some of you, you probably live in this world now. Okay, so with ARM and revenue recognition in general, you've got, I thought about this as I was putting the slides together. You got basically three high-level things going on here. You've got a dollar amount, you've got it, which is just how much are we recognizing? At the end of the day, how much are we actually going to recognize here? You've got triggers. I'm calling them triggers, but I think that's what we call some revenue recognition events. It's basically what has to happen to start revenue recognition. And then you have a schedule, which is once we've started revenue recognition, how long is it going to take for me to get all my revenue? So you think about like, fulfill and bill or cash and carry, those simple cases that fulfill and bill, your trigger is, well, I I sent it out, I assigned a FedEx to it and I shipped it. That's your trigger. And your schedule is like, well, I can recognize all of it, right? Because it's out the door and we're done. But that's still a schedule, right? The schedule is like all right now, immediately. But in ARM, it allows you to be more complex and more refined in how you do these things. So the triggers can be not just fulfillment, right? It can be on billing, or it can be actually NetSuite allows for custom triggers, in fact. So you can get more nuanced on your triggering of revenue, and your schedules are super flexible. Most common, you're going to do a month-to-month linear, like for us, if the subscription spans a year, you want to span that revenue linearly across 12 months. That's pretty common. And then the amount is typically the sales amount, but we won't get into too much. But in ASC 606, you can actually get different things and put them all together, and then that grand amount is your amount, and there's allocation and all kinds of crazy stuff that I hope a lot of you never have to go through. But we'll cover that at some point too. Okay, so before we get into ARM, let's talk about how do you do RevRec in NetSuite without ARM. And Amort journals are a good thing to note here. Obviously, in the simple case, let's say a fulfill and bill or a like cash and carry kind of thing, RevRec just kind of happens, right? Like your item record, you've got like your AR account, and you've got, or even your income account. Um, you just go from like, basically cash to revenue. But if you're in that middle space for like, I really need to kind of like have a schedule for revenue recognition, but I don't have ARM, you're probably using or looking at amortization schedules. Or amortization journals. So in NetSuite, under the user guides, there is a entire user guide dedicated to amortization journals. So if you don't know about these, that is a great place to start. And amortization journals effectively allow you to create a template where you can say to NetSuite, you can set up this template ahead of time and say, hey, every month I want you to go recognize, in this screenshot, $20.75 and, debit this one GL and credit that other GL and start on this date and just do it monthly. And then just as part of your month-end close, you'll just run this process called create amortization journals, and it'll grind through all of your templates, and the templates will make the journals. Those will post to the GL. You'll never have to think about it again. So it's kind of like for those of y'all who came from the QuickBooks world, it's a little bit like a memorized journal in a way, but it runs on you kind of pre-schedule it. It's not like you set up a journal and say, just run this same stamp every single month until I tell you to stop. It's more of like, here's the schedule, here's the total amount, here's the debit credit accounts, here's your start date, here's your end date, linear, go. So amort journals are worth mentioning if you are in the space of needing more advanced revenue recognition than nothing, and you're not quite at the stage of ARM yet. And on the slide here, monthly subscription paid annually is probably a good example where you could probably use that. They do have limits though, because it's NetSuite. There's always limits that you have to be aware of. So they're not really super ideal for sale revenue, like if you sell stuff, because then every sale you have to make, you've got to go set up an amort journal for it, for that sale. And, yes, you can script it, maybe you can workflow it, I'm not sure, but it just, it gets a little bit like, it doesn't scale super well. We have found it great for importing external revenue waterfalls. So that would be through like an acquisition. The amort journals triggering is basically you create the amort schedule and then you run the go create amort journals job at the end of the month. So triggering is a little bit rough compared to what you'll see in ARM. And then this other final note, and it's been a while since I've made these, but I remember this was very painful at the time, is when you set up the templates, they don't look right when you first set them up, but they actually work right. They just visually they kind of look a little odd. Okay, so be aware if you are not using amort journals and you are in the kind of the space of like, we need a better way to do revenue, but maybe you come out of this talk and you're like, I don't think we want to go to ARM yet, then take a look at amort journals. Those might be something worth considering. Just noting the caveat thoughts here. Probably the biggest with amorts is they're not going to scale with your business over time, because they're kind of manual in nature. All right. Go to our first CPE question.
All right, I'll go ahead and pop it up here. Hang on 1 second. So to answer the CPE questions, you do need to do the pop-up that you should be able to see now. We're going to leave this up for about 1 minute. This is the first CPE question. About 30 seconds left. CPE question number 1. This is the first CPE question. You have to answer in the pop-up. If you're not getting the pop-up, you might have to update your Zoom app. You can log out real quick, log back in, do the update. A second question popped up? That's weird. Okay, I'm gonna go ahead and end the poll. Sorry, I don't know what's going on with this. And I'll share the results.
I was only seeing a single.
The second question popped up on the screen, but no. Okay, well, this is the first one.
I had one
Okay.
pop out, not second. Yeah, okay. So the first question is revenue recognition moves funds from the balance sheet to the income statement, true or false? So the answer is true. So we're in revenue recognition, we are moving funds from the balance sheet into the income statement.
Mike, I think you actually probably advanced your screen to do the second.
Oh, okay. I'm so sorry,
All
everybody.
right, but that's okay. We could go ahead and do the second one right now as well.
All right, let me go to the second one.
Okay, now we're going to do the second question. Oh, how do I do that? Stop sharing that one. Okay, second CPE question is now, the pop-up should be there now. Some of the questions are grouped together, some of them are not. Second CPE question, about 40 seconds left on this one. 15 seconds left, second CPE question. Sorry for the confusion there.
Yeah, I'm sorry about that.
So we're a little bit split on the answers on this one. I'll end the poll, share the results.
All right. So deferred revenue is where on the balance sheet? The answer here is liabilities. So the way I like to think about deferred revenue, you think about that, those two words, deferred, meaning it hasn't happened yet, but it needs to happen, and revenue meaning you're telling the world you've provided value. The way I like to think about this is that this is revenue that you've not provided to your customer yet, so you owe them this value. Ergo, anything you owe is a liability. So that's kind of how I like to think about deferred revenue, where it's on the balance sheet. So deferred revenue is in a liabilities section. All right, let's keep going. Oh, there's one more. Okay.
All right, we'll launch the third one here. CPE question number 3.
This one's a little tricky. I'm sorry.
Is that one up? Nope.
I see it.
Relaunch. Okay, there we go. CPE question number 3 should be visible now. Keeping us on our toes.
Yeah.
Ooh, this one is it's pretty split. 30
Hey,
seconds left on this question. This is an interesting question.
isn't it? It's fundamental, but it's
Yeah.
interesting.
Yeah. Okay, 10 seconds on the CPE question number 3. All right, I'm going to end the poll now.
Perfect. So the question is, a GL posting invoice must always exist before you can recognize revenue. And the answer, believe it or not, is no. And this goes into where, again, and this is where ARM is really a big help, where your billing and cash collection is independent of your ability to tell the world you've provided service. So you remember in our definition way up top of revenue, your commitment is you have to deliver value to your customer, and your customer's commitment is that they have to basically commit to paying you at some point in time, which means you haven't really issued them an invoice. So it is very fundamental note, and it's very brain twisting if you are not in this ARM world of revenue recognition. It's why I put this question here. It's actually really important concept. So your billing and your revenue recognition, the triggering and the schedules are independent of one another. Like just think of them as completely independent. They can be. But at the end of the day, when you're done billing and you're done recognizing, they will equal. They have to. Okay, let's get into ARM. So now we're going to cover, so we talked about earlier, what is revenue, right? What does that mean on the GL perspectives? Because that's really important background for what we're going to get into. And we kind of lightly covered how do you do revenue in NetSuite without ARM. So now we're going to go into ARM. I'm going to go into a light to medium level. So this is really going to be valuable if you're not using ARM. And if you are using ARM but not very well, this will also be valuable for you as well too. So high level topics, how to get it, why would you use it, how does it work, how does this change your business, right? So if you're looking at using ARM but you don't know what that means, that topic, especially if you're like at the VP CXO level, that'll be a good one for you. And then some considerations and caveats that I've learned over time. First bullet I'm going to talk about on this slide, obtaining ARM. So ARM's not free, it is a add-on. So you will have to work with your NetSuite account manager to get ARM provisioned into your system. It is an additional service that you have to buy from them. Okay, why would you want ARM? It's a super high level, right? We're going to cover this a little bit. I'm going to give you some screenshots that'll help. So number one, complex revenue scenarios. Like if you are, in those meetings and you're finding that you're going through audits, probably are driving this of like your billing schedule and your recognition schedule, like they're not as simple as they used to be. Maybe you created a new product or you acquired a company, whatever. If your revenue is complex, you know that you need to do something. ARM is probably a good idea, and we'll cover in that more. The others reports created, I'll cover that slightly here, but I know, when you work with your NetSuite rep, they'll sell you a lot on the reports. They are valuable to some of you, they'll be extremely valuable, some of you they won't be valuable, but we'll kind of cover what those are. The third bullet, big value for us is automation and audit. Anytime you touch anything, an auditor is going to ask about all of your controls and, all of what are the controls to make sure that somebody isn't just sneaking something into the income statement. So anytime that you can use system automation and say nobody touches it, right? We set it up and it just runs, it makes your audits a lot smoother. ARM will definitely help there. ARM does have a forecasting element to it, so we're going to cover that briefly during the talk. And then the other thing is ARM being written by NetSuite works well with all other things NetSuite. So that is very handy. And then ARM, I can speak from experience here. Yes, ARM is scalable. It does scale quite well. So I don't think you're going to have any challenges there. Okay, so let's dive into those a little bit. So complex scenarios, what does that mean? Number one, ASC 606, right? So if you're working with your auditors and they they mention this, I got to tell you, you're probably going to ARM at some point. It's not when it's not if, it's when. So if you fall under 606, you're probably looking at ARM. If you found in your business and some of your product lines that you just need independent billing and recognition, you really want to look at ARM, right? Because it really helps you manage that. If you want to start revenue recognition on something other than just billing or now, so now being like, amortization schedules and billing being, billing, you're probably going to either throw a lot of scripts at it or just use ARM. So that the triggering, more complex triggering is another reason you'd want ARM. And then if you just need automation, just scale, right? If your business is growing and you just do not want to throw staff and people at making sure that at close all your revenue is recognized because you're managing a bazillion amort journals or, God forbid you're doing like CSV imports out of Excel or something like that, like ARM's going to help you with that. You can just kind of set things up and let it run. Ryan, I see your thing. How much does it cost? I don't know. That you got to work with your account manager on. So here's, this you'll cover, when you work with your account manager if you don't have ARM, but here's a list of all the revenue reports, at least came up in our system. So these are, these are pretty nice. Just depends on your business, which are valuable for you. But in general, we see this at Vertafore too. In general, you're either really looking at things by revenue, like, revenue by customer is a big one for us, or you're looking at things by deferred revenue, like, what are the commitments that we have not fulfilled yet? Because that gives you kind of a forecasting capability. So I'm not going to dive into all of these reports, but I want to kind of give you a overview of, what kind of reports are just right out of the box with ARM. So for automation, this is another why would you use ARM? Automation and audit. This is just from, our experience using it. So minimizing manual journals is huge. Any of you who are going through audits, manual journals are just like kryptonite, the amount of scrutiny that those things have. So if you can just get out of the world of doing any journals related to revenue, that would be so much better. And ARM creates a journal. You can see in the screenshot here, it creates its own journal. So we'll follow a little bit later, but you just push a button and the journals are created. And that makes it really nice with auditors, right? So you don't have to like um, go manually create a bunch of journals. Um, the third bullet point there, so revenue, ARPS, and fulfillment can work independently. That is, from an audit perspective, what you don't want is, somebody in professional services, for instance, needing to go remember to create a journal to post, right? You don't want them doing that. What you want them to do is you want them to put their time in, and then they just trust that the machine does the revenue pieces right. Like they don't need to care whether they're putting their time in a milestone, item versus a T&M item. They should just put their time on and get it approved. So ARM helps manage all of that, where like just people do their jobs in their kind of space, and then ARM manages when the triggering happens and when schedules happen. And really the only thing that like your professional services or your AR people, all they really need to know is like, hey, if you if you book time and get it approved, like it's gonna recognize revenue because that's how revenue works. So that's another advantage of ARM is it just helps keep those roles independent. And again, that just helps with audit as well. I saw some questions come by. So Corey, I think interrupt me if there's anything I need to address there.
Okay, we can also just take a quick break before, quick Q&A before the break if you want, Mike.
Okay, cool. So another reason for ARM, why would you use it? So ARM does have built-in forecasting. I'm going to lightly cover this because frankly, we don't use it too much, at least their version, but I want you to be aware it exists, where ARM gives you the ability to set it up on when you actually recognize, go follow all these rules. But then you can say, but if you haven't recognized yet, go follow these other set of rules and call that a forecast. And then you can do all of this reporting based on the forecasts and the actuals independent of one another. So if you're really if that's like a thing for you, that is a thing in ARM that you can do. You can actually turn forecasting off in ARM as well, which we have done. 'Cause we use actuals and deferred revenue as kind of a good, milestone for forecasts. But ARM does have forecasting. Okay, next CPE question.
Okay, CPE question number 4 is up. It seems like it might be a tricky one too.
Yeah, it could be. I know I'm kind of, yeah. I could have worded this in a little bit differently.
I don't know. It makes sense to me. We'll see what everybody else thinks. About 20 seconds left to answer the 4th CPE question. Okay, CP question number 4. Going once, going twice. And I'll go ahead and end the poll.
Right.
Here's the results.
So without ARM, does NetSuite easily support RevRec on a schedule different from your billing schedule? So in general, the answer here is no. You're not going to have a lot of options for separating the schedules of recognition and billing if you're not using ARM. There are probably some caveats. So that's where Corey and I were like, yeah, maybe I could word it different, but easily is the key word there. It's just, you're very limited without ARM to separate those two. Okay, I think, do I have another one there? No, it's break time. So let's hit the questions. I think, did we have some questions? Let me see if I can look at the
Yeah,
chat.
looks like Maya had one. She says, I was told if you had been doing manual journals for revenue recognition, that makes it difficult to implement ARM. The company was doing manual revenue JE for more than 5 years. What do
know
you
if
think
I'd,
about
I
that?
don't know if I'd agree with like, so, at some point, if you're implementing ARM, you're coming from some way of doing RevRec into ARM. So really your decision comes into, do I migrate all the existing stuff fully over to ARM, or do I let the existing contracts run their course the old way and new contracts come in through the new ARM way? And our experience with that was the latter. So we actually were moving from Oracle. So it had its own way of doing things. And we ended up using Amort journals to run out the old recognition the old way, and then used ARM for the new stuff. And, to bridge the gap in that, year or two window, whatever it was, yeah, you probably had to use spreadsheets to kind of marry the two together, just depending on how complicated it was. So I think I would not say that ARM is like a hard cut over thing, even though there's going to be a lot of gnashing of teeth, especially if you're in ASC 606 and you're dealing with allocations. But keep the faith. There is a way, right? You got to keep the end goal in perspective, which is those old contracts will eventually run out. They're either going to run out or you're going to recontract them, but eventually they will not be old anymore and everything will be new. And if you can get everything into that new ARM space, you're going to be in a lot better, you're going to be a lot better position than if you never went ARM.
I think that
Perfect. Thank you. All right, let's get started. Welcome back, everybody. Hope you got some coffee. All right, we are now going to kind of delve into the hows of ARM. How does ARM work? We're not going to get super detailed, but we're going to get, uh, light to medium detailed because it's important to me that you kind of understand the high level flow of how ARM works. It'll help you kind of understand just, more about ARM. So this is kind of our summary of what we're about to talk about, right? So global setup and what do you have to do in your NetSuite system, right? We're going to talk about item records, and there's a lot of nuances that go into item records, so the little sub-bullets there. Then we're going to talk about it looks short, but it's going to be long, arrangements, elements, and plans, and then this other thing called revenue plan, planned revenue. And then finally, revenue journals, which is where the rubber meets the road. All right, let's get started. Global setup. So this is you have ARM for the very first time, and now what? Where do you even start? So bullet number one here, Pro Assistance Advise. I would recommend if you are moving to ARM, call somebody who's implemented ARM before. There's a lot of these little settings in the there's just ARM's not simple. And it's important to make some of these decisions early up, or at least be aware, eyes wide open, of some of the decisions you have to make and how it behaves. Just so it, and we're going to get into a little of this in this talk about some of the decisions you make impact your day-to-day business. So I would recommend if you're looking at implementing ARM, work with a consultant who's implemented ARM before, right? They will help walk you through some of these settings, and that will be a good thing. So, in going into a little more detail, so page colon accounting preferences. This is the same accounting preferences where you're probably used to setting other things. I took a screenshot here of the ARM section of some of the things that that you have an option to set there. Kind of some biggies there is your default deferred revenue reclass account. So we're going to talk about reclass a little bit later. It's again, to me, it's one of the more magical parts of ARM. Um, and your journal defaults, so kind of, which forms are using for your ARM journals. ARM journals are they're normal journals, but they are different because they're created by ARM, and NetSuite, the system, knows that. Your default rules. So rules don't make a whole lot of sense right now, but we're going to talk about those more. So like in the global settings, you can say like, and if you don't know, here's the default. And then probably the biggest thing with ARM is that you will hear this when you're looking at implementing it, like, oh yeah, it can run on a schedule. And this page called Accounting Preferences is where you set up that schedule or where you tell it, please don't run on a schedule, which is the case with us. We like to control it. Closed sales order behavior. So if you use sales orders, and you probably do if you're moving to ARM, as you know, there's this process with sales orders called closing them. So this is where, you might have sold $10,000 worth of products and services, but at the end of the day, you and your customer agreed that really they only just wanted $8,000. But the sales order's done, like the deal's done. So you want to quote unquote close the remainder. So, you think about revenue recognition, how should that behave when you close the sales order? So that's one of the things you can configure here. And then cost amortization. So I am not going to cover cost amortization really at all in this talk because honestly, I don't know it enough to speak clearly about it. But there are cost amortization setup settings in this section as well. So yeah, there is a global setup for ARM as you would expect. And again, just work with some pros when you're going through this because they will be able to help on these. So when you're setting up ARM, item records is probably the most important thing. Well, not the most, but it's really important. So your item records, which you are near and dear used to using nowadays, you will find with ARM, there's a new sub-tab under the item record called Revenue Recognition, and there will be all these little areas underneath it. I'm sorry my screenshot was blurry on this. It was not when I put the slides together. But basically, there's different sections that will become available that you have to set on every single item record. So one of them is the revenue recognition rule. We're going to cover that in a little more detail very soon here. What is a revenue recognition rule, basically? And then when do you create revenue recognition plans? So these really pertain honestly to the triggering of revenue and the schedule at which revenue will recognize. The GL accounts are really, really, really important. So this is, once revenue starts, what are you hitting on the GL? So what deferred revenue account are you hitting? What revenue account are you hitting? And then there is a foreign exchange adjustment account. Again, I do not know too much about this, but I will tell you that it is there. So for RevRec with FX, and that is set up on the item level. The next two bullets are definitely worth noting. So if you are using ARM, you might not know this. And if you are moving to ARM, you're considering using ARM, you will want to know this exists. And that is these two checkboxes. So one is called hold revenue, and the other is called direct revenue posting. So I'm going to start with the second one. Direct revenue posting, if you check that on the item, configuring the item, what you are telling NetSuite is if you sell this item, I call it the skip ARM checkbox. It basically tells NetSuite just skip ARM. Don't worry about deferred revenue and all that nonsense. Just treat this item just like you would before you ever had ARM. Just straight from the balance sheet, the income statement. Just no deferred. Just skip it all. That's direct revenue posting. There is a caveat to direct revenue posting, and one of y'all correct me if you know some nuances here, but I'm pretty sure I'm not going to get this one wrong, is if you have a transaction, which we'll later refer to as a source transaction, you cannot mix and match line items that have direct revenue posting and not direct revenue posting. Like it all has to be this like the same in that one transaction. So the good news is with direct revenue posting, you do have the ability to skip ARM with this checkbox. You can say anytime I sell this thing, forget about ARM, just keep it simple. The bad news is that it has, within a single transaction, you can't mix and match. So just be aware of that. The other checkbox called hold revenue, that one gets a little more complicated, but it's also really powerful. So that one basically says by default, when you sell this thing, just put it on hold. Like don't try, even if it triggers, just don't yet recognize revenue until somebody goes and unchecks this on hold checkbox. That allows you the flexibility if you even if ARM's, scheduling doesn't quite work, or I think it's really intended for more like, you have a secondary event that needs to happen before you want to recognize revenue. It allows you to kind of manually control like, and now I am going to start revenue recognition. So it's this checkbox called on hold. And this checkbox on the item record says by default, it's on hold. So that's a useful tool in your arsenal. And then the final that I just put as a bullet here is ASC 606 field. So I'm not going to cover ASC 606 in depth in this talk, even though I've definitely lived in that world for quite some time. But there are fields that are related to fair value formulas and just basically how a fair value formula is selected based on all kinds of different variables. Those are on the item record setup as well. So the item record setup is really important. Something I'll note in a later slide, but I'll note here too, is that you will find that, some of you might find, especially on the revenue recognition rule in the plan, that you might have to manage, for instance, you might have to create a different or might want to create a different item revenue or item record for triggering. So some of them are triggered on fulfillment versus some of them are triggered on billing. You might find yourself in a position of wanting to duplicate the items for that. You don't have to, but you might. So the next bullet is the GL account. So you set up really this should have been prior to the previous bullet, is you need to go set up accounts in your GL for all this activity to occur in. And I covered this earlier when we were talking about the fundamentals. It is important to note that NetSuite, for those of y'all who've not created GL accounts, which could be a lot of you, because generally those are set up initially at, implementation. The way NetSuite works with GL accounts is you can number it anything you want. There's of course accounting standards for how you number things, starting with a 1, 2, and all that. You can name it anything you want. The name is just a text field. NetSuite doesn't care. But this type drop down is really important, right? So like if you, for instance, name it deferred revenue, but you put it in like just a general liability kind of type, you will find when you set up your item records, it might not be there when you go into your deferred revenue and you want to go pick your GL account. So it's important that the type of your the accounts that you set up are set up as one of these, income, deferred revenue, or unbilled receivables. So very important when you're setting up your accounts, which also means if you have existing accounts that you created, say, you know, 4 years ago, and you called it deferred revenue, but it wasn't actually of type deferred revenue, and now you're looking at going live with ARM, yes, you will need to create a new GL account of type deferred revenue, and you have to, call it whatever you want. And you'll probably have business, processes that you'll have to start migrating away from the old quote unquote deferred revenue to the new, real deferred revenue. So just be aware that this account type really matters when you set up your GL accounts. All right. Let's see, create revenue plans on. So there's part of ARM setup is this thing called create revenue plans on. And this is basically what triggers revenue. So this is how you say like, well, how do you trigger revenue when you're dealing with this particular item record? And these are the three, unless you've turned on custom records, which we have with Zone. These are the three basics, right? You can trigger revenue on billing, you can trigger revenue on fulfillment, or you can trigger revenue on arrangement creation, which is kind of a hard to wrap your head around, but it's basically like immediately. Um, this is not a custom list. You can't just make your own triggers here. And this is the one where I mentioned with item records. So if you set an item record and say revenue is triggered on billing, and then you change your mind later and say, well, actually, when we sell this item, we want to trigger it on fulfillment, or sometimes we want to trigger it on billing, and sometimes we want to trigger it on fulfillment, it gets more complicated. That's when you get into the conversations around, or do we need an item record for on billing and a different item record for on fulfillment? I think there's a way to pick this dynamically in the sale too, but then that gets complicated, right? You got to remember to do that. So this create revenue plans on, just be aware you're going to pick it on your item record, and you need to think through, is that really when I want revenue to be triggered all the time for this item record? And you can't just add things. There is, though, a custom, I think they call it a plugin, where you can trigger revenue and recognize revenue based on custom records, so NetSuite custom records, which is very fundamental to how Zone's revenue module works for any of y'all who are also considering using Zone Advanced Billing. Okay, revenue recognition rules. So this is another thing you're going to set on your item records, that this basically defines the schedule. So, on the prior slide over here, the create revenue plans on, this is your trigger. When do you start recognizing? What has to happen to tell the system that I have delivered value now? That's basically what create revenue plans on. But revenue recognition rules says, okay, I've delivered value. Great. how how much revenue can I recognize? Can I recognize all of it right now? Or should I like basically amortize it over on a monthly basis? Um, so the revenue recognition rules is what helps you on that. This screen is kind of the screenshot here is one of the it's a screen for setting these up. You can create custom revenue recognition rules. So unlike the triggering, these are custom. And they're pretty flexible in the custom. So you've got, this start, stop, offset frequency thing. So triggering basically starts the rule, right? But then in the rule, you can say like, okay, I've been triggered, but I want to start. You can literally have like very custom where you say it starts on this day of the year, right? Um, and then the offset again, I've actually not used the offset, but I think that's where you can say like, start here, but offset it by, I honestly haven't used it, but you do have the offsets for starting revenue. And then yes, the how to handle end date changes. So this is where if you have revenue that's in flight and then somebody goes and changes the end date for your line item, because remember, revenue recognition with RM happens on a line item basis. And every line item, I didn't cover this earlier, but it's kind of important. Every line item has a start and an end date for revenue. Like when do you plan to start it? When do you plan to stop it? Um, So if that end date changes, i.e. really the span, if originally it was a 12-month span, but you go change it to 18 months, what should ARM do? So that's part of what you'll define in here. This whole section here is another one of those, like if you implement ARM, hire people who have implemented ARM, hire some pros who've done this before, because they will definitely be able to help get this stuff right. And these are what drive the automations that keep the auditors away, right? Like you can just say like, hey, there's this revenue recognition rule. Here's how it works. It just works. We set it up. These are really the one of the real key pieces of magic in NetSuite ARM. Okay, so source records. Source records are really key in NetSuite. So really, this is around, I mentioned earlier around revenue is recognized on a line item basis. So you might be like, well, Mike, a line item basis of what? Like there's all kinds of transactions in NetSuite, and this is the list. So I pulled this straight out of the Advanced Revenue Management user guide, which also, if you're looking at using ARM, read this. This Advanced Revenue Management User Guide is all things ARM. It is a dense read, but a good read. I wouldn't say read it from cover to cover, but definitely have it available because you'll reference it a lot. But these are the transactions that ARM is going to consider. This is without the custom revenue kind of add-on. So you've got your, sales orders, which is kind of interesting when you think about it, because sales orders do not post to the GL, right? Like, I mean, they have their sales order account, but they're not on your balance sheet, right? A sales order is not like a posting transaction, but they can be used by ARM to recognize revenue. They're used basically as contracts because NetSuite doesn't sort of kind of have a contract. Invoices. Those, and it says they're, not created from sales orders. That is key because if the invoice is created from a sales order, you're probably using the sales order to drive ARM. But if you just do a standalone invoice, it can have its own, ARM will consider that as essentially a contract or commitment, that one standalone invoice. We're going to get more into how these source records are seen by ARM when we talk about revenue arrangements. So cash sales, cash refunds, you see the list here, right? Return offs, credit memos. These are the various transactions that NetSuite ARM will look for when it is creating these other artifacts that we're about to talk about. And then you got the project records. So if you use NetSuite's SRP module or their project module, then projects tie in very nicely to ARM. It understands projects, projects understands ARM, so that's a good thing. Subscriptions, we do not use that module, so I can't speak one way or the other of it, but I'm seeing in the docs, those are well supported as well. And then custom records are supported if you have this extra plugin. Again, that's a lot of how Zone's advanced revenue works as well. Okay, so you've got these source records, which we talked about, sales orders, invoices, credit memos, and all that. At some point, you've got to map data on your source line items, because again, it's all line item based. You got to somehow map fields on the line items to fields that ARM cares about. Somewhere that's defined, and this is the somewhere. So there's a page called page colon revenue recognition mapping, and you or whoever sets up, your revenue, your ARM instance will go make these mappings. So this is really powerful, right? So you can map custom column fields, like you can make up your own, fields on the columns, and then you can map those custom values into ARM values. So that gives you another level of control of what you are feeding the ARM machine and when you're feeding it. It really gives you a lot of control and flexibility there. So this page called revenue recognition mapping, this is definitely a key piece of setting up ARM initially. This is, again, where you are mapping columns on line items of your transactions, or what NetSuite calls a source transaction, into your revenue recognition fields, which we're going to be showing here later. The key fields that you definitely got to map, though, you got to map a start date, an end date, a dollar amount. And then your create revenue plans and revenue rec schedule are typically coming off your item record. Okay, so now we're going to talk about, we're going to get a little more detailed into what are the different records that ARM uses to kind of keep track of stuff. So here we're talking about a transaction that's called a revenue arrangement. I think if you read ASC 606, I think they call these obligations. So this is like it's the revenue version of a contract, if you think of it that way. So it is the overarching collection of all things that you have committed to your customer and your customer has committed to you. This is called a revenue arrangement. So when you're using ARM, you're gonna use these a lot. Um, First thing is that these are non-posting. These do not hit the balance sheet. They do not hit the income statement. They are a kind of a view of the revenue commitment that you're dealing with. They're a very important view because they kind of collect everything together. If you are in the world or going into the world of ASC 606, these will be incredibly important because these are your 606 obligation, right? This is where everything comes together and if you need to deal with allocation, which if you're not dealing in 606, allocations where you basically you have to consider the collective revenue of everything in the contract in order to determine how much revenue you will recognize on a per line basis. So that's like a whole different way of thinking, right? Like you sell all this stuff together in a basket. For instance, like professional services and a product. The classic scenario there, and this again was where a revenue arrangement's valuable, is you sell a customer some offering, some subscription, let's say, but the customer cannot receive, they can't gain any value of that subscription until you have also done like some professional services work, like you've gone in, set up a server or installed your software, whatever. Like you have to do this professional services work in order for the customer to receive any value at all from the subscription that you're selling them. And under ASC 606, again, depending on what you're selling, but you'll work with your auditors on this. In certain cases of ASC 606, your auditors will tell you that you can't just recognize the revenue for that professional services work because so what? The customer didn't they didn't get their subscription yet, right? But then you can't just independently recognize the subscription because we have to do the professional services work for the subscription to even be available. So they kind of get bundled together where you can recognize both of them once you've turned on the subscription and done the PS work to do the subscription. Um, so ARM, this is one of the huge value adds of ARM, right? So ARM lets you put those two together, consider the value of both the PS and the subscription as one collective value and say, okay, and because it's, the obligation is that the subscription lasts a year, say, then you can recognize the revenue of the PS and the subscription together on a 12-month schedule. So ARM lets you do those kinds of things. Those are the kinds of things you'd be if you're in 606. And if you're talking in that kind of allocation space, you are definitely on a revenue arrangement transaction. So zooming out a little bit, again, noting revenue arrangements are non-posting. They do not hit the GL at all. That's very important. NetSuite treats a revenue arrangement as a transaction record. So if you go and do a search or an analytics or whatever, and you look for revenue arrangement, you'll find them nowhere. But if you do a search of type transaction, you will see that you can search transaction type is equal to revenue arrangement. Don't know why NetSuite did that way. You will find that everything else we talk about here with ARM is not a transaction, but a revenue arrangement is. So revenue arrangements are non-posting and they show up as a transaction. Parent record is standalone, sort of. Let's remember what I was saying. One arrangement per transaction. Oh, yeah. So generally, a revenue arrangement is it's the revenue obligation version of some real transaction, the source. Remember, we talked about a source a couple minutes ago. So in general, if you just let ARM be ARM, a revenue arrangement will have all the lines of your revenue arrangement will have the same source. It'll be the same credit memo, the same sales order, the same invoice. And you'll grow to learn like, oh, an invoice has a revenue arrangement. That is true. But one thing that NetSuite allows you to do, again, this is valuable for ASC 606, is you can say, great, I've got a I've got an invoice and later I went and created a credit memo to offset the invoice, right? We'd credit it off. But I need to, for 606 purposes, I need to consider all the invoice lines and all the credit memo lines together when I'm doing allocation to make all that right. NetSuite allows these revenue arrangements to be what they call merged together. So you literally tell NetSuite, take the invoice revenue arrangement and take that other credit memo revenue arrangement and go create a third new arrangement that puts those two together. And in those two original arrangements, they kind of get marked in the state of, oh, hey, this is what I used to look like, but now I've been merged up to this third new one. Go look there. So revenue arrangements can be merged, and that is really important when you're dealing with 606 and allocation. If you're not dealing with 606 and allocation, then you will find that revenue arrangements basically are a mirror of your sales orders or invoices or credit memos. Each line, this is important, each line on a revenue arrangement maps to a record called a revenue element. We're about to talk about revenue elements very shortly here. NetSuite, technically, when you really dive into it, it's sort of kind of this fuzzy revenue element, but for the purpose of this talk, each line in a revenue arrangement maps to a revenue element. And then, yes, we talked about 606 allocation, probably more than you wanted to know, I'm guessing, with arrangements. Okay, so let's talk about revenue elements. So revenue elements, as we said earlier, each line in an arrangement is a revenue element. So what is a revenue element? A revenue element, think of a revenue element as being the revenue version, the ARM version of a transaction line. So you think about like a sales order, it has lines. Every line in the sales order will have a revenue element. Every line in your invoice will have a revenue element, right? So it's that kind of one-to-one. Your source transaction has lines. If it has 15 lines, then each of those 15 lines has 15, has one revenue element. So your revenue arrangement will have 15 revenue elements. Your sales order has 15 lines. It's this kind of mirror copy that looks at the world from a revenue perspective. So revenue elements, they are also non-posting. So you will not find revenue elements anywhere on your balance sheet or your income statement. They just aren't there. Revenue elements also cannot be modified. I think there's maybe one or two checkboxes you can check on it, but in general, you can't change anything on the revenue element. So you have to change. This is a higher level theme that we're covering, but I haven't really explicitly stated is that ARM has a sequence of records and it has this like flow of data where the data starts in your source record and it kind of flows through like it flows through the arrangements and elements and plans and journals and all that. And there's a sequence. So the fact that you can't edit elements is likely because NetSuite wants to enforce this flow. Like if you want to change the element, then you got to change the source record. A big part of that, quite frankly, is that at the end of the day, the revenue that you recognize has to equal what you sold. Like you can't recognize more than you delivered, right? So NetSuite does not want you to do things independent there or to get them out of whack. Corey, you had a note. I don't know if you want to add to that note.
Well, I'm sorry. I
Okay.
slightly disagree with the comment that you can't edit revenue elements, because you can change the values on those, but they have to add up to the original total value of the sales order.
Yes.
So you like if you have fair value prices and it does weird calculations on those because you have it on some items and not others, then you can edit the amounts and like start and end dates on those
Yeah, on the arrangements, right? On the arrangement
on
lines.
the revenue element
Oh, okay.
itself.
Okay.
So I just wanted to
Okay. Well, thank you.
clarify. Sorry.
No, that absolutely, that's good.
Okay.
Um, let's see, one revenue element for each source. Oh yes, when you search these revenue elements, you will find in your search or analytics, there is a record of type revenue element. So if you want to search revenue elements, you search for revenue elements. That's actually really straightforward. Unlike the revenue arrangements, which you have to find through transaction searches. Another key field here is you can add custom fields onto your revenue elements. So that is really helpful, especially when coupled with the fact that you can search these directly. And I think these show up in custom fields under other record fields, if I remember right. So fear not, you can actually add custom fields here. Okay, so the third record type that ARM uses is called a revenue plan. So it's going to get even more a little bit tiptoey here. So they have something called a plan, and we're going to talk soon about a planned revenue plan, planned revenue that are slightly different. So revenue plan is I think of it as a gateway to store the planned revenue, which sounds really confusing. It's basically like, hey, so for this line item, like what actually happened? That's important. Like, did we recognize revenue? And if so, how much and when and exactly where? Um, and that's called but the revenue plan also says these are the rules that I am following for that plan below. So again, apologies, the screenshot here is a little blurrier than I thought it would come out, but down at the bottom, you've got the very specific, on this period, I recognize this amount on this journal from, this account to that account, like very specific details, which is called the planned revenue. But on the top level is the revenue recognition plan. So first off, the plan is tied to a revenue element. So the plan would say, I am the plan for that revenue element. It's just a one-to-one thing. And then it'll say, and these are the rules that I'm using. These are the triggers I'm using. This is the revenue recognition plan, record we covered a little earlier as far as the start and end date. You can customize and all that. Um, and then the amounts that it's using, that like the dollar amount it's going to pull from its element. So the revenue recognition plan, kind of on the bullets here, it is also non-posting. So revenue recognition plans do not hit the GL, not on your balance sheet, not on your income statement. Their parent, so the plan is related on a one-to-one to a revenue element, which we just talked about, and just to kind of confirm or reiterate, the revenue element ties to a line item on your source transaction. So a revenue element is going to tie to like your sales order line or invoice line or credit memo line. So you have like, your sales order line has an element and the element has a plan, if you think of it that way. Um, there are two different kinds of plans in ARM. One is called actual, one's called forecast. So we talked earlier about one of the advantages of NetSuite is that it has the ability to forecast your revenue. But you could use different rules. I don't know if you remember me saying like, you can like actually recognize revenue on a certain schedule, but you can forecast revenue on a different schedule. Why you'd want to do that, I don't know, but like I'm assuming they wrote that feature because people actually needed that. The way NetSuite manages that difference is through these revenue recognition plan records. So it will create a plan of type forecast, and it will tell you, this is what I forecast for April. But then when you actually recognize revenue in April, it'll say this is what actually recognized in April. It's not a forecast, it's actual. So that's what clearly delineates that line. Um, this is where, and Corey, like, feel free to chime in here too. This is where that on hold checkbox is found. So I'd mentioned way up in the item record setup that you could set up the item to say like just start on hold. So the on hold is kind of a damn it. Like I don't care what the schedule is, whether that there's triggered or not. If this thing's on hold, I'm not proceeding further. There will be no recognition of this. This plan will not proceed until somebody unchecks the checkbox. So that's where the checkbox exists on a very granular level. Again, gives you control, but you don't want to go crazy with the control because then you're writing a whole bunch of scripts or you're doing CSVs or whatever to manage checkboxes. And then these can be searched through the revenue recognition plans record type. So very similar to revenue elements, these are easy to find when you're doing searches or an analytics search. It's its own record type. It's right there, but it's called the revenue recognition plan. And if you're like us, you'll probably just wind up calling them plans or RevRec plans, and it might take you got to remember the word recognition when you're looking for it in the search box. So these are revenue recognition plans. Now we're going to get into the revenue planned revenue. I'm so sorry of the naming, but these are things in NetSuite, but they're not really named well. And I get this name from their table structure. If you're writing SQL, this is what SQL calls it, is a revenue plan, planned revenue. So what this is, the revenue recognition plan, let's go back there. That's like one record that says between dates X and Y for dollar amount at, Z, I'm going to use this schedule. So therefore, I'm going to use this schedule between dates X and Y for dollar amount Z. Revenue plan, planned revenue is this table underneath that says, and therefore, for January 2025, I plan to recognize $15. For February, $15. For March, 15, and like the very detailed this period, this dollar amount, this GL account. That table is the revenue plan, planned revenue. Um, it is, per the bullets here, it's not really easy to access. You can access it in the user interface. There's like this infamous little icon that looks like a box with an arrow that points diagonally up that will get you to it from the revenue recognition plan record. You can search them through the revenue recognition plan record, but you can't search them directly. Corey, correct me if you think otherwise there, but I have never seen a way other than through the revenue recognition plan record.
They're very hard to find in
Yes.
Yeah.
So these revenue planned revenues are really what you care about because they tie a period to a journal. Like they're as close as you can get to like what actually happened or what do I actually expect to happen, but they're not first class records. They are accessed through the revenue recognition plan record. So just be aware of that. Plan period versus posting period. This is a good one. So this is also where you will see, and that you would summarize this in the word catch up. So, we talked about this checkbox about on hold. So for legitimate reasons, your business might choose to not recognize revenue when the automation would otherwise have recognized revenue, right? Let's just say you have a legitimate reason for that. And then time progresses on. So, you go through your months and you're still not recognizing revenue, but you probably should have 2 months ago and last month. And now this month you decide, okay, it's okay to recognize the revenue. Well, what you want to do is basically a catch up, what's known as a catch up, right? Where you say, okay, well, now I'm allowed to recognize the revenue for 2 months ago and last month and this month. So this revenue plan, planned revenue table, it will tell you that when you recognized revenue, it tells you, I'm recognizing $15 now in March, but it was for revenue that I actually expected to recognize or planned to recognize in January. And then it'll tell you, I'm recognizing revenue now in March, but I actually originally planned to recognize it in February, like last month. And then you'll see a third line that says, I'm actually recognizing revenue now in March, and I planned to recognize it in March, right? So you can easily see in that little revenue plan revenue subtable, you can easily see visually the catch up happening. You can see where revenue, is recognized for prior periods, even though it's being recognized in one period. So that's this bullet point here about planned period versus posting period. It's also worth noting for those of y'all who don't use ARM and have never used ARM that ARM is that sophisticated enough to like keep track of catch-ups, right? And recognizing revenue really on a granular level, it's on a planned period. It says like regardless of when I plan to recognize $15 in January 2025. If I wind up recognizing in January, great. If I wind up recognizing in March, great, but I still planned on it in January. And then finally, this planned revenue is also what visually shows you where, which journal this actual revenue was actually recognized. So to kind of reiterate these records that we've talked about, I'll scroll back here. Right. So starting at the arrangement, which is like your obligation, your high level contract, right? Non-GL posting, not in the balance sheet, not in the income statement. An arrangement has elements, non-GL posting, not in the, not in the balance sheet, not in the income statement. They just aren't. And then the elements have plans, and the plans are not GL posting, nowhere in your balance sheet or income statement. And your plans then have this subtable underneath called the planned revenue, and it lists these, when did I plan to do it, when did I post it? But one of the things it mentions is a journal, which is our next topic. So a journal, revenue recognition journal, hurrah, is GL posting. So when you're talking about ARM, this is the only thing that posts to the GL. Everything else is keeping track of paperwork, basically. So how does ARM post to the GL? The answer is through a journal, and that's it, just through a journal. Um, so yeah, ARM journals or revenue journals, they look a lot like normal journals. As we saw earlier, there's a global setting that you can use to kind of configure which form you use here on these journals. Um, the approvals of them, like we at Vertafore, we use workflows to manage approvals. So for us, they're system approved and they don't go through any sort of manual touch, and we lock them so that, from an audit perspective, you can't touch them basically. They're just locked. So ARM does have journals. We're going to cover a little later in this talk how these are created. But this is the only place that ARM touches your GL. That's probably the most important part. These are tied very closely to those planned revenue records. And I'll show you in the process of how ARM works from a business process. You'll kind of see how that's done. And then user guide topic editing advanced revenue recognition journal. I don't remember I remember reading something here and being like, oh, I got to note this. But in general, just don't edit ARM journals. Um, Yeah, you really don't want to. I don't remember, and I don't know, Corey, if you've had to edit ARM journals, but I'm sure it has upstream effects, and I guarantee you your auditors are going to talk to you about it.
I feel like it may not even be possible to edit them, but I guess I could be wrong, but definitely not a good idea.
Yes, definitely not a good idea. So if you're using ARM and it's making journals and you need to edit them, don't, is basically the rule of thumb. If you consider doing it, go read the user guide on this topic to see what fallout could happen there. Okay, next CPE question.
Okay, let me get this one queued up. So we are on number 5. All right, CPE question number 5 should be launched. About a minute or so to answer this question. I have some split opinions on this one.
Yeah. I could see how, yeah.
30 seconds left to answer the CPE question. CPE number 5, going once, going twice, and we're going to end the poll.
All right. This was split right down the middle, Corey. So, which makes me think I didn't word it as clearly. So, which records defines a schedule, like defines the schedule of how revenue should recognize once it's triggered, whatever the revenue is once it's triggered? The intended answer here is the revenue recognition rule, right? That is a record that says, I don't care who you are, but like if you are triggered and follow this rule, here's the schedule you are going to follow. I think for the half of you that said arrangement, though, like, the lines on the arrangement all are going to have a rule on them, if I remember right. So I could see that kind of too. But each rule, by the way, in your arrangement, each line in your arrangement, this might blow some of your minds. Each line can have a whole different rule to it. Like you can have all kinds of different schedules going on at the same time within a single revenue arrangement. Um, So yeah, the intent of this question was really around what record do you use when you say, I want to define a schedule, independent of items, independent of source records, independent of it. I just want to define a schedule. That's going to be your revenue recognition rule.
So revenue arrangement is not technically incorrect, but rev rec rule is more correct.
Yeah, yeah,
Yeah.
yeah. All right. I think, did I have another one after this? Let's see. Go back to
I
here.
think so.
Yeah.
Okay. Number 6. CPE question number 6 is launched.
Keyword here being shows.
Oh, it's Holly. Is it Holly?
So about 20 seconds left. CPE question number 6. Okay, CPE question going once, going twice, and I'm going to end the poll.
All right. Which of these records in NetSuite shows a schedule of when revenue will recognize for a given revenue element? So the answer here is definitely revenue planned revenue. So a revenue element will have a plan, and a plan gives this like detailed schedule below of when your planned period versus actual periods that we just talked about. So that was the intent of this question is like, where do you see that? What is that table of like very detailed, like planned period, actual period? So that is the revenue plan, planned revenue. Again, to reiterate it, that record cannot be directly searched. You can only find it through searching the revenue recognition plan records. I'm sorry, but that's how NetSuite did it. But it is good to know because I promise anybody who uses ARM, you will want to look for those. You'll always want to look for them. Okay, go back here. Okay, one more.
Okay, one more CPE question right now. Question 7 should be launched. Keep you on your toes. About 30 seconds left on the CPE question. Okay, last chance, CPE question 7. All right, I'm gonna end the poll.
So the question is, do revenue elements post to the balance sheet or the income statement? The answer is no. So revenue elements, you'll never see them on the balance sheet or income statement. The revenue elements have a plan. The plans have the planned revenue, and the planned revenue ultimately turns into a journal, and the journal posts to your balance sheet and your income statement. So again, important concept with ARM. The only way ARM ever hits your balance sheet and your income statement is through a journal. Everything else is just housekeeping. All right, let's move on. Business processes. All right, so we're going to talk. Let me check my time. I think, Corey, I've got about 15 minutes? Is that where I'm at?
Sounds about right.
Yeah, okay, good. All right, so this part of the talk is really geared for the prior was more like technical accounting, let's be honest. Like if you're like in the trenches and you have to implement this thing and have to know how it works and deal with the day to day, like you run the revenue team kind of thing. This is more like, hey, I'm looking at implementing ARM and I got a whole staff of accountants. Like, am I going to have to hire people? Like, what is this going to involve? This part's for you. Or if you're so zeroed in on one part, you've never seen the big picture, this will help too. So how does ARM going to change your process? So we're going to cover very similar to what we covered earlier. How do you create and manage arrangements? How do you create and manage plans? Revenue journals, reclass journals. We haven't talked about those yet, or at least we have lightly. And then what happens at period end? Because we are all in that space at period end, every minute matters. So if this adds time to period end, I want to know about it right now, right? That would be my conversation with anybody trying to sell me something that happens at period end. Okay, so arrangements. So NetSuite, we talked about this transaction of type revenue arrangement. There's a source record. It mirrors the source record, but I never said anything about how do you do that? And the answer is NetSuite has a screen, literally this screen that you see in the screenshot called Update Revenue Arrangements and Plans. And you literally just go in, run this screen, and click update revenue arrangements. At least for us, that's it. You go in, click one button, and then you wait, I don't know, an hour or two. For us, it could be longer or shorter for you, but it is really not that hard. And what this screen does, it's a native NetSuite screen. It goes and looks at all of your source transactions. It looks at those item record checkboxes of I call it the skip arm box, but whatever skip arm. And it decides, okay, for this source transaction, do I need to create an arrangement? Yes or no? And if no, go create one. Or if yes, go create one. It'll also do all the updating of the arrangement. So if you change something on the source, do I need to change something on the arrangement? For instance, adding lines to the sales order, like what should I go add lines to the arrangement? There's a lot that goes on in this one button click, to be honest. So it creates revenue arrangement, but it also updates existing revenue arrangements based on what's happening on your source records. So that's key. Despite the name of this screen, the screen also updates and creates revenue element records. So we talked about revenue elements. They are essentially line items of the revenue arrangement. I will tell you that when you get really into ARM, you will understand the nuance when I keep saying essentially line items. They're kind of sort of different, but they're basically the same. They being a line on an arrangement and a revenue element record. So this same screen manages revenue elements. Just think of it that way. So there's not a separate step for elements. It's right here, one button. And then the third or the last bullet point here is that this update revenue arrangements, quote unquote, screen or this process of updating revenue arrangements, this can be run in the background on a schedule. So this is part of your global setup. You can change this global setup at any time you want, but you can either, I think the default used to be 2 hours. I don't know if you know Corey different, but like you can set it up to run on a schedule, like in the background, or you can just run it manually by going to the screen and running it manually. Our experience, we run it manually primarily just because we want control. The downside to running it manually is that it has a lot of work to do. If you run it like, once a month, it's got a whole month's worth of work to go catch up on, so it takes longer. But if you run it on a schedule, it'll run pretty quick, right? Because there's not much to change. So this is the business process of running arrangements. If you think about like, do I need staff to do this? Like, well, you need somebody to go to the screen and click the button. It's literally that easy. Um, yeah. Update revenue plans. It so turns out that use exactly the same screen as update revenue arrangements, except use a different button. So it's no coincidence that this screenshot and this screenshot are the same screenshot. You go to the same screen and you click a different button. Um, you need to do plans after arrangements. So the sequence matters here. So we talked about these different records in a sequence for a reason, because NetSuite first creates arrangements, then it creates elements, then it creates plans. So when you're updating these, you have to also update them in sequence. The sequence matters. Revenue updating plans is the same thing. It either creates the plans or updates plans based on things going on in the element and your source record. It gets complicated. I'm not going to cover it, but there's a lot of magic that happens when you push update revenue plans. And the magic is a lot of the value of RM, right? It just handles it for you. All right. You can, as on the screenshot here, by the way, you can filter like, oh, just do like certain types of arrangements or plans, but our experience is you just run all of them. But you can do filtering.
Mike, can I just mention real quick on that
Yeah.
last screen, that I believe it runs like once every 2 hour, one or 2 hours. Because
Is
I know
it one or
and that it's like 1 or 2 hours. And
okay.
in my experience, that's what I've seen happen is it just around and you don't have to worry about it.
Yeah, yeah,
Okay.
yeah. And that's a global setting again, right? Under accounting preferences, I think.
Yep. Yep.
Yeah, yeah. Okay, and then so from a business process perspective, your third step, this is when you hit the GL. Gonna reiterate that this is when you hit the GL. So like, we have this whole process that we go and run reports and audit and just make sure like, does everything look right? Yeah, I mean, it's right. Does it look? Yep. Okay, go. This is where you hit the GL. There's a screen called Create Revenue Recognition Journal Entries. There's a magic button on the screen you see in the screenshot called Estimate, which is very valuable. It's so valuable. Thank you, NetSuite, for putting that button on. You click that button, and what it'll do is it seems like it delays, but what it's actually doing is it's going and computing every journal that it would create. It doesn't create them, but it like pretends that it would and comes back and gives you a number and says, okay, if you run this, I'm going to go recognize X dollars of revenue in total. And that is super valuable because if you're like most businesses, your revenue, you kind of have an idea what you should be recognizing on a per period basis. So that estimate button is really valuable. If you have not used it, use it. It does not impact your GL to push estimate. It just gives you literally just a little bar on the top that gives you, here's how much it's going to recognize. But this is the screen that your people will run or somebody will run when you click create journal entries. You click that button, it will go and create revenue recognition journals based on the plans. So again, reiterating, sequence matters. If you run journals before you run plans, and then you're like, why is my revenue short? Well, may not have created plans. Like you got to create the plans first, but you can't create plans before you create arrangements. So sequence matters in this flow. And then again, there are filters you can do here. So you don't have to create journals for the whole universe. You can create journals just on, like you see here, like on a customer level or per account level. It gives you some, some nice kind of filters here. We generally run it month end, so we're running it against everything. Include prior periods is really important. So that's where, we talked about planned revenue, revenue plans, and the concept of a catch up. So if you don't check include prior periods, you're probably not going to see catch ups. Corey, tell me if you think I'm incorrect there, but I'm pretty sure I'm right on that one.
Yep, I agree with that.
Okay. All right, so this is where you hit the GL. Page calling, create revenue journals. This screen takes, for us, it takes, I don't know, I think it takes an hour or two to run. I don't remember how long it takes, but it's, hours. Again, we don't run things in a background schedule. We run them at month end once a month. I do not remember, Corey, do you remember? This is not something that can run automated, right? This has
No,
to be,
yeah, no, you can create a schedule,
oh,
and it runs every 6 hours,
okay,
if you schedule these.
okay, okay. I don't know if I'd recommend doing that though. I don't know, Corey, if you had a different experience, but once these journals are created, like if you have to go change stuff, like cleaning it up would be kind of a mess.
It does get a little bit dicey. Like if you find an error on an order or a revenue arrangement and you have to fix one of them, you have to delete an entire RevRec journal, which may include hundreds of transactions on it.
Yeah,
And then fix the one that you want, but then you can always just go back and rerun this. And
yeah,
yeah.
yeah, yeah. So I guess the words of wisdom are kind of, yeah, words of wisdom there is you probably don't want to create journals automated. That might be something you want to, like deliberately push the button and say we're ready to go.
And there's errors that happen too on some of those. So there's
There
errors.
are,
Yeah.
yes, there are. I think that's in my caveat section in the end.
Okay.
Yeah,
Okay. Sorry.
there definitely are errors.
All right.
All right, and then there's this process called create reclass journals, and this to me is magic. Admittedly, we are not using this because we are dealing with some issues with Zone. It's I think more of a volume thing, but this is like magic to me. So this is NetSuite's ability to go and look and figure out like, okay, well, you've got deferred revenue and income. That's easy. But sometimes you have this concept, which we spoke about earlier in this talk, where you haven't billed them yet. Like you haven't even actually issued an invoice, but you can legitimately recognize revenue. So your invoices are hitting, that's what gives you your deferred revenue. So if you're recognizing revenue, what are you going to have a negative balance in DR? That doesn't make sense. So this screen goes and figures all that out and says, oh, okay, well, actually the revenue needs to come from this like um, unbilled revenue account on your asset side. And then it takes care of figuring out, okay, well now you've issued the invoice for that revenue that you recognized 2 months ago. So let me go move from unbilled uh, into DR, right? So like this screen takes care of all that for you, which is I don't know, Corey, if you want to add any more on this, you probably use this screen more than I have, but it looks amazing to me.
No, I mean, in my experience, this has also been a scheduled process.
Okay,
So I don't really have any thoughts there.
okay. But it does create journals, so that's important to note as well. So it is GL impacting and creates journals. But the unbilled side of it is like, wow, that's amazing. You don't have to, you just don't have to think about all that stuff. And then final period close. So if you buy ARM and you're in this very familiar screen of closing your period and going through tasks, you will see new tasks show up for recognizing revenue and reclassing revenue. And those two lines are going to be the two screens we just covered. One is create revenue journals, if I remember right, and then the other is the reclass, this create reclass journals. You can skip these in period close, if I remember right. Corey, correct me if I'm wrong there. Um,
Yep, I believe so.
yeah, I think you can just click the yeah, it's done, trust me button. We generally, again, we manually run all the steps in sequence, and so generally what we do is we run all that stuff, I don't know, like close business day -4 or something like, 4 days before close. We'll run the vast majority of things, and then we'll do all of our audits and checks and validate so that at period close, when you're actually closing a period, you're not sitting there for 2 hours waiting on journals to create, and you're not grinding through errors, like Corey had mentioned, which we make it sound terrible. It's actually not terrible, unless it is, and I'll get in that in a minute here. So just be aware that period close, there's these two new steps. If you wait till the very last minute, which I would not recommend, if you wait till like period close to go update revenue arrangements, then plans, then journals and all that, your period could get delayed as you grind through errors, or you're just, your income statement will not be totally correct because you'll have to be like, there's errors, it's not going to recognize, I'll deal with it, do an accrual journal, all that. So with ARM, just try and plan to do your ARM stuff kind of ahead of period close so that in close you're just dealing with exceptions at that time. There's no surprises. All right. Corey, we want to pop up
Yep.
there.
Yeah,
Right?
I'm getting it. So this is the final CPE question number 8. Okay, last chance for our final CPE question, about 5 seconds left. And I'll end the poll.
All right. So for correct and accurate being keywords, revenue recognition through ARM, do the various ARM processes need to run in a specific sequence? The answer is absolutely yes. So you can run these different steps that we just covered, you can run them out of sequence. However, plans and arrangements are a great example. Is if you run update revenue plans, but there's no arrangement there to begin with, then there are no plans. Like it won't know to like create plans or edit plans because the arrangement's not there in the first place. So the sequence matters. There is a sequence, and during the month, yes, you can run things kind of out of sequence to kind of, it's not going to really hurt anything. But when it comes to period end close and I want my numbers to tie out and match and I don't want any discrepancies, yes, you need to run them in sequence. So that's definitely a thing. Okay. And I think, yeah, the last slide. So closing thoughts. So kind of closing thoughts here from my lens, and then Corey, I don't know if you want to add anything from your perspective as also, but number one here is have a solid billing process. So if you're looking at ARM, you will find that you inevitably are going to be considering and looking at your billing process as well, because the two are tied together. Like at the end of the day, you're going to recognize only the amount that you ultimately bill for. The schedule of the two might be totally independent, right? You might have this allocation thing going on, but at the end of the day, the two numbers match. So if you are looking at revenue, but you feel uncertain about how you do billing, you need to really consider your billing process, right? Or if you are like considering ARM and you're using some third-party billing process, you might have challenges there too. You've got to make sure your billing process and your ARM process work with one another. So just make sure those two tie. The same is going to go if like you're using ARM and you want to change your billing platform, whatever you're using for billing, like that could have impacts on ARM. So just make sure to consider those two together. Planning your item records. So that's really around the whole revenue recognition schedules and plans and defaults that come with an item record setup. Again, if you work, not the bullet here, but I said earlier, if you work with somebody who has implemented ARM before, they will guide you through this. They will have gone through the the time-tested battles of like, creating item records. And if you use this item record, then it'll rev rec on this schedule versus that schedule. Also noting around the skip ARM checkbox. I always call it skip ARM, but I can't remember what it's actually called. But those the fact that you can't mingle them on source records, that just things to consider also. ARR reporting versus ASC 606 reporting. Oh boy, so how many of you use, raise your hand, you use Salesforce for your contracting and closing deals, and then you push that into NetSuite. And in Salesforce, your entire sales team and probably half of your executive team talks about ARR, right? Annual recurring revenue. And ARR is really simple. You get big dollar amount and then you divide it by 12. And if you're moving into the world of ASC 606 and you're going into revenue allocation, that is not as simple as ARR. So if you're moving into ASC 606, you really need to have conversations with especially your sales execs, just your execs who are making decisions around how's the business doing, because ASC 606 reporting can get head scratching at times. Like, why is that number? And it's like, well, because there's this, allocation between this, that, and the other. So you will probably want to retain ARR reporting as well as ASC 606 reporting. So just if you're going in that space, just be aware that there will be some internal reporting processes that you'll probably need to tweak around ARR versus 606. They will be different if you're doing allocation. And then the final point I mentioned a little bit earlier is just from a performance standpoint. Let's say, Corey, I'm running a little bit over here, so I'll try and speed it up. But from performance standpoint and from just a business process, try and get your ARM stuff done before month end. Like, don't wait till the last minute or you will be stressed. And the next period, I promise you won't wait till the last minute. Caveats with ARM. The first one, which Corey alluded to, I also kind of alluded to, is that errors. I'm calling them here ARM errors. So errors do occur for legitimate reasons, right? But NetSuite, how they tell you these errors are really kind of cryptic. I'm going to be honest. Like some of these, you're just like, what does that mean? A lot of these, actually, you'll look at and be like, what does that mean? Invalid entity 123.46 for subsidiary 3. Like, what does that mean, right? And it'll take you a while. Again, this is where working with somebody who's done ARM before, they will help guide you through because they'll have twisted their ankle on these before as well. But the errors are kind of cryptic. Just heads up. You will find your way through them. You will learn the pattern in them, but you will always wish that they were more intuitive. ARM journals are not super helpful in searches. So I have found, and maybe Corey you'll find different, but like, or can chime in differently, but ARM journals are just kind of like normal journals. And like, for instance, an ARM journal, when you view it, there's a revenue plan on every line. You're like, oh, this is great. There's a revenue plan. Like this came from that plan. You can dig down. It's great in the UI. But then when you start searching, it's like, where's the revenue plan? It's nowhere to be found. How do I know where this line came from? So ARM journals are, you know them when you see them, but they've just been challenging to work with. Corey, tell me if you've found differently in your experiences.
No, 100% agree. I mean, safe searches for anything that's related to the revenue arrangements or plans or elements is always very dicey. It's not, they don't act like normal records in NetSuite.
Yeah. And then revenue plan, planned revenue. I know I mentioned this a lot earlier, but that is a really important screen you'll find yourself in all the time. Like you'll click into an arrangement, into the element, into the plan, and then you'll go look at the actual planned revenue. It's just other than the screen, it's kind of hard to find in searches. You'll find them, they're under revenue plans, but you'll find yourself wishing they were easier to get to. All right, I think that is it.
Okay. Awesome. Thank you so much, Mike. I just wanted to say that for you being a developer at heart, you certainly know ARM inside and out, like from an accounting perspective, and that's very impressive. So fantastic presentation. I thought you covered everything very, very well. So thank you so much for taking the time to put this together.
Yep, thank you. Yeah, I hope everybody is empowered just a little bit more. That's the goal.
Absolutely. Okay, so we'll go ahead and shift gears here. I'm going to do a quick 2025.1 highlights. So I'm going to share my screen here in 1 second. Here's my slideshow. Okay, hang on. Got this coming up. Okay, so 2025.1, we are in the midst of all of the upgrades to all of the different, all of your accounts, everybody else's accounts. I know that some have been updated already. Some are probably going to be like this weekend. I think this weekend might be close to the final round of the updates. So if you haven't been updated yet, you will be updated very soon. If you don't know if you've been updated yet, you can go to the very bottom, like go to your home screen in NetSuite and go to the very bottom, and it'll show you like 2024.2 or 2025.1. It'll tell you if your system has been upgraded or not yet. So I'm going to go ahead and dive in here. I've broken the highlights into 2 sections. So this section, global updates. These are updates that are available to everyone. So they're just kind of NetSuite core functionality. So first of all, this is what we're going to talk about: Prompt Studio, updates to Text Enhance, CSV import updates, Customer 360, Suite Analytics, and Bank Match update. So these ones I'm going to go into detail because they generally affect everybody. And then the next category that I have are these module specific updates. And so these are updates that NetSuite is putting out that are not available, that like they don't apply to everybody. And so I'm not going to go into detail on these ones, but the ones that I've put here are the different modules or parts of NetSuite that have relatively significant updates. And so if you use any of these, I recommend going to the release notes and reviewing them for your specific needs. Again, I'm not going to review these ones in detail because there's a lot here and it doesn't really apply to everybody. So, so these are the ones that there's a lot of updates: Ship Central enhancements, CRM, employee management, which is part of Suite People, warehouse management enhancements, supply planning, manufacturing routing, manufacturing mobile, Suite Tax, bill capture, and then like half of the release notes is all of this developer updates. So SDF, Suite Script, Suite Talk, there's a lot of updates there that only apply to really just a handful of folks. So I'm going to jump into the ones that are kind of universal. So first of all is the Prompt Studio. So Prompt Studio is a tool for managing the generative AI prompts and text enhanced actions in NetSuite. Generative AI prompts are the instructions given to large language model, or LLM, which probably everybody's heard that term at this point, to generate text. So in NetSuite, you can use Prompt Studio to manage prompts that are used by Text Enhance or SuiteScript generative AI APIs. You can also use Prompt Studio to create and manage Text Enhance actions. So just a quick, I mean, I don't know if we can show hands here. Is anybody currently leveraging the Text Enhance? Because this has been available for at least a year now. I don't know. Are you able to like raise your hand? I don't know if anybody. So is anybody, okay, I see one thumbs up. So one person's using Text Enhance. Okay. So Text Enhance, I've talked about it before as part of their AI initiative, and basically it leverages so if you're looking at an item record in NetSuite, you can use that all of the data from the item record to generate a custom description for that item. And so the Text Enhances, it does that's one of the features that it does. So this is an enhancement to the Text Enhance that's part of this Prompt Studio update. So you can customize Text Enhance by controlling available actions, assigning prompts, defining page context, and viewing audit logs. You can override system-defined prompts and add new actions and prompts and specify when actions appear, either when users click the Enhance Text button or select text in various fields. So these are controls in the new Prompt Studio that control this function of it, this part, the Text Enhance. Go to the next screen. So another thing that Prompt Studio can do is this SuiteScript Generative AI API. So this is a developer level thing. SuiteScript Generative AI APIs allow you to create and manage prompts for use in SuiteScript. So the NLLM module provides methods, and so those methods there to integrate prompts dynamically by referencing their internal or script ID instead of hard coding them. I recognize this is probably not the audience for this type of information, but it is a pretty significant part of what they're doing with the Prompt Studio. And then there's also some SuiteCloud Developer Framework introduces 2 new custom objects for the Prompt Studio. So if you're interested in that, if you're a developer, aka Mike, you can go read the notes about this to build that into maybe some scripting. So here's a quick screenshot of the Prompt Studio. So you have a prompts section, and then you have a Text Enhance action section. If you want to go and see if this is in your account yet, you can just do in your global Prompt Studio. And again, this is brand new to 25.1. So I believe, I haven't seen it in 24.2. So this is, it's a new update. So outside of the Prompt Studio, we have the Text Enhance updates. So partial Text Enhance. So you can apply supported Text Enhance actions to content you select in a text area, a long text area field, or a rich text area field. So you can just select different areas that you want the Text Enhance to apply to. There's make shorter and make longer actions that are supported more widely across NetSuite now. And then the Text Enhance feature has been added to custom fields and is available for long text, text area, and rich text field types. So every NetSuite release, they're adding new features and functions to this Text Enhance bit by bit, and so it's leveraging all of this AI functionality to do these automatic enhancements. Here's a quick screenshot. So if you're looking at a description field on an item record, for example, you can click on this little Text Enhance icon. Let me get my little laser pointer. You can click on this little Text Enhance icon, and then there's different actions that you can do to this text. You can also select just part of the text, maybe just one sentence, and then do an action to it as well. So this has been out for a while. They're just making little updates to it here and there. Another global change, CSV imports. So they have newly supported record types for CSV imports. Item fulfillments, which is, I think, it's like I've been wanting this for like 10 years now. So finally, previously you could only use the bulk fulfilling orders function to basically create item fulfillments, but now you can apparently do these CSV imports. I haven't done it yet, but I presume you'll be able to either add or update item fulfillments. And one thing to note about item fulfillments is they have to be created from a sales order, basically, or a transfer order. So you can't just create a standalone item fulfillment. So you'll probably have to have a source transaction that you're saying create that item fulfillment from when you're doing that CSV import. The other one is item receipt. And so an item receipt transaction records the receipt of returned items from customers and updates accordingly the following return authorizations, inventory records, inventory asset accounts, and the status of the return. So I haven't tested this yet, but to me, it sounds like the item receipt import might not be available for purchase orders. Has anybody messed with this yet or experimented? Anybody have any thoughts on that? No, but no one.
No.
Okay. So I'm going to test this and I might have an update on it, but it sounds like it's only applies to these receipt of returned items based on the notes from NetSuite on this.
Womp womp.
Yeah, exactly. All right, so Customer 360. So as of 2025.1, several new metrics have been added to the Customer 360 to provide more comprehensive view of customer interactions and business opportunities. If you haven't seen Customer 360 yet, it's been in NetSuite for a while now, and it's kind of like that text enhanced. They're just making little tweaks and updates to it every release. It's actually really, really cool, and it's available in every account. So some of the things that they've updated this time, recent transactions has been updated to recent activities. The recommended products now include pricing details and highlight frequently bought items. Sales performance has 2 new tabs, sales this year and customer lifetime value. That's pretty cool. Opportunities and estimates tab, orders and returns tab, and receivables tab. So all of this information is very, specific to one customer. But you can go and see all of that from the customer record. So if you want to find it, there's a couple of different ways to get to it, but this is kind of the easiest. If you go to the customer record, in the upper right-hand corner, you'll see View Customer 360, and it'll take you to the Customer 360 dashboard for that customer, and then show you all of those metrics that I just mentioned, plus there's a whole bunch of other stuff there too. Suite Analytics updates. These are kind of anticlimactic to me, but I just wanted to point them out because they do affect everybody. And so I also want to just mention that Suite Analytics does not just mean Suite Analytics workbooks, the analytics tab at the top of your screen in the main menu there. So NetSuite refers to Suite Analytics as reports, save searches, and the workbooks. So these specific updates don't apply to the Suite Analytics workbooks. This first one basically just applies to reports. So you can send reports to each group member. Previously, you could only, when you sent an email, the reports were sent to the group email address only and not to the email addresses of each member of the group. So this is like for scheduled reports. The next one is new HTML features and save search. So the new HTML features and save search enables users with the admin role to assign the create HTML formulas and search permission to other users. This change improves the security of saved searches in your account and raises awareness of the risks of inserting HTML and scripts into a saved search. That could be a little bit dicey, I think. For more information, you can see the help topic, evaluating code and saved searches. What's not clear to me on this update is if this permission is required to be able to add HTML into a saved search, or if it's something that it's just another lever that you can use to control who can and cannot. Because by default, if you have the ability to create a saved search up until now, you definitely could create HTML in those saved searches as well. But research that, come back to the group on it. So here's the Suite Analytics update. This is on a report, and you would go to the schedule report settings. Here's the new setting, all individual group members, if you want the email to go to them. And then we have Suite Analytics updates. So this is a view of like a global permission on an employee record. No, I'm sorry, not on an employee record, but this is on an employee record. So you can add a global permission for that employee, or you can go to the role and under setup, then you can add that create HTML formulas and search function. So you can do it global or at the role level. So this one is Dana. I know Dana Larson's very excited about this one, if she's still on.
I am. It's pretty nerdy to be excited about that.
I know, right? That's okay. That's why we're here. So this is changes to the auto create rule behavior on match bank data page. So NetSuite no longer creates auto-create rules by default when criteria are met. Previously, the checkbox for creating these rules was automatically selected, and that led to unintended transactions and matches. Now, users must manually check the box to enable auto-create rules. When enabled, NetSuite generates transactions from bank data and matches them automatically. So if you're on your match bank data page, you would choose a bank account that you're gonna do your matching on, and then it shows your transactions on the left-hand side, and then it'll show all of your imports on the right-hand side, or maybe that's backwards. Imported transactions are on the left, and then NetSuite transactions are on the right. But at the very bottom, this is the box that used to be checked by default. So now it is not checked by default anymore, which I think is great because, like it said, it caused all kinds of unintended matches in the process. So those are the main updates that I wanted to notify everybody about, that are global, that apply to everybody else. So thanks for listening. And at this point, we'll go ahead and stop our recording and we'll turn it over to, well, actually, I don't know, Mike, do you mind
Yeah,
doing
I'll
the, well?
yeah, I'll
All
run
right,
Q&A. I always run Q&A. Sure.
perfect.